Have you owned a business for years and you've been paying a landlord for your office or your warehouse or your retail space? Your business has been doing great and you've decided it's time to invest in your own commercial property. You've been looking around and you see several different options for financing. And honestly, there's two main types of financing that businesses will get to buy commercial property. The two types are a conventional commercial loan and an SBA loan, which is a Small Business Administration. There's a couple types of SBA loans, but for the sake of this video, we're just going to lump them together and compare conventional commercial loans to SBA loans. So what is a commercial loan or a conventional commercial loan? Well, it is the type of financing that's provided by a bank, and there is no government backing of this loan. So essentially, the bank that you are banking with or that you've gone to for this financing, they are the ones loaning you the money. There is no government insurance for them. It is their decision to loan your business the money for the building you want to buy. What they will do for you based off terms and interest rates and all these types of things, it's much like getting a mortgage for your house. It's going to be dependent on how they look at your business file, the amount of cash your company has, the cash flow, all these kind of things. But ultimately, it's the bank making the decision on whether they are willing to loan you the money for that building. Now let's talk about an SBA loan. You are still getting a Small Business Administration loan from a bank. However, that bank is backed by the SBA, the government itself. This means the bank has lower risk, and the terms for these types of loans are different than the conventional commercial loans. You'll see some differences in the down payments, in the length of terms. So that's what each loan is. Now let's get into what each loan offers in regards to terms, why you may want to use one loan over another. So first, let's talk about some of the main terms of each of these types of loans. And when I say terms, I'm talking about down payment, length of the loans themselves, and how the payment schedules are set up. So when we are talking about a conventional commercial loan, they require down payments in the range of generally 20 to 30%. So a 20 to 30% down payment required for commercial loans. Their length of terms are relatively short. Generally, they are going to be in the anywhere from 3 to 10-year range, with a lot of conventional commercial loans on property being in the 5-year range, maybe 7 years. These payments, however, are amortized. Basically, the payment schedule is set up on a longer term. They are set up on a generally 20 to 25-year payment schedule term. That means you are making payments at a 25-year amortization schedule, but your loan may only be 5 years long in its length of term. That effectively means it is a balloon loan. And all conventional commercial loans are balloon-type loans. They are keeping your payments low by giving you an amortization schedule that is longer, 25-year schedule, but hey, the term may only be 5 years, so you have not paid off the entire loan at the end of the 5 years. Now let's talk about some of the main terms for the SBA loans. So SBA loans generally have significantly lower down payment requirements than conventional commercial loans, generally in the 10% range. So half or more of a conventional commercial loan when it comes to down payment. They also have long terms, and they're amortized over that length of the term. So generally an SBA loan will be a 25-year note. So much like a house mortgage, when you get an SBA loan, if you pay it for 25 years, you will have paid it off. There is no balloon at the end. So those are the main terms that you'll find with each of these types of loans. So let's talk about reasons why a business owner might want to use a conventional commercial loan, even if the down payment seems higher or is higher than an SBA loan. Well, some of the reasons fall into the category of speed. A conventional commercial loan can generally be processed and closed in about half the time of an SBA loan. Again, This is the bank itself loaning you the money, so the processes will be a little more streamlined than when you are dealing with a government-backed loan, which is going to just have a lot more red tape because, hey, it's got the word government in it, right? Also, when it comes to conventional commercial loans, there is generally no owner occupancy requirement. So let's say you're buying a good-sized building, a 10,000 square foot building, and you want to keep your business in there, but you may only use a quarter of that building. You want to turn the rest of it into other tenant spaces you can lease out to other businesses. That's fine with a conventional commercial loan as long as the bank is on board with everything you're doing. You can even use these loans to buy property you are not going to put your offices in, not going to work out of. So that gives a lot more flexibility to the conventional commercial loans, and that's some of the reasons that businesses will choose those types of loans. So what happens at the end of, let's say, if it's a 5-year note and you've got this balloon? Well, as a business owner, you're just going to have to get it refinanced. Maybe that bank will work an extension with you on that. Maybe you will have to take it somewhere else and get it refinanced. But you can always keep the loan in place. You're just going to have to deal with it when the term is up. Now, why would somebody not want to use a conventional commercial loan? Number one, the down payment is higher. Number two, as I just mentioned, you will have to deal with that loan in a shorter period of time. Maybe you can find a bank that will give you a 10-year note, but that's still significantly less than you're going to get with SBA. Now let's talk about SBA. What are the advantages to an SBA loan? Well, clearly the down payment is significantly less, and you've got that long fixed term. So it's just a case where you are able to get into this building you're going to buy with less out of pocket from a cash standpoint, and you've got a good, stable, long-term loan that you're not going to have to worry about doing something with in 5 years or 7 years or whenever that conventional commercial loan may be due. What are some of the other reasons out there somebody may or may not want to use one loan or the other? Well, I just mentioned with a conventional commercial loan, there is no requirements on the owner-occupied facet of the loan itself. If you were buying that 10,000 square foot building and only using a little bit of it, that's fine as long as the bank is good with all that. With an SBA loan, there is an operator, an owner-operator requirement. You have to be an owner-operator of at least 51% of the building that you're buying. So that's a pretty significant owner occupancy requirement. Again, going back to that 10,000 square foot building, you would have to, be taking more than 50% of that building, and your business may not need that much space, or that could be a burden for you. So could be a reason to not use an SBA loan. The others, or the other reason that one may be an advantage over another is a conventional commercial loan generally does not have prepayment penalties. As I've already talked about, they are shorter term loans. The banks that are offering these loans aren't trying to be in the long-term loan business. They aren't trying to be mortgage companies when they provide these loans to you. So they also are not going to, hit you with any prepayment penalties should you pay it off in 3 years, even if your note is for 5 years. With SBA loans, however, there are prepayment penalties. Now, they are somewhat prorated and they are not the life of the loan. And the penalty itself starts to become lower the longer you get into the loan. But it is something to think about. If you took out an SBA loan and you somehow had a windfall and in a couple years you want to pay that loan off and move on down the road, there will be a penalty for doing so. So those are the primary differences between the two loans, and those are the two main loans you are going to find out there on the market if you are looking to buy a building. One is not better than another. They both offer some advantages depending on your situation. If you're somebody that doesn't want to owner-occupy the building or doesn't want to owner-occupy at least 51% of it, maybe you want to close quickly, a conventional commercial loan may be the right fit for you. However, if you're a business owner that wants to spend as little cash as possible on down payments, have a longer term fixed loan the SBA loan may be better for you. And remember, within SBA, there are a couple different types of loans. Generally, the 504 loan is the most common, but there is another type that can allow you to also finance other aspects of the building, like equipment and things like that. I hope that makes sense. We appreciate you watching, and I'll see you in the next video.